Surprise, surprise, Siren is crashing today. If you've been watching this channel yesterday, you know that the Siren price is getting manipulated quite a bit. Now in this video, we're going to talk about when those potential manipulations turn around, if there's actually a way to play the game in our favor. The market cap of Siren fell from 2.2 billion to 750 million. So that's value destruction worth 1.5 billion. But something is off here. What is off? Just have a look at the trading volume. In the last 24 hours, we only saw 75 million of trading volume, but at the same time the market cap fell by 1.5 billion. So something seems to be going on here with leverage. When we look at the decentralized exchanges, so here PancakeSwap, we only had 26 million of trading volume. Again, 26 million versus 1.5 billion. That's a multiple of roughly 750. This here is an hourly chart. So within 3 hours, the price fell by 61% over here, and with the recent crash by 70%. And that's happening while the number of buyers and sellers isn't even that much in an imbalance. There's only 100 more sellers than there are buyers. And so clearly something is off here, right? We've got this massive volatility of 60-70% in a few hours. We've got value destruction of $1.5 billion, where at the same time on the spot market, on the decentralized exchanges, only 20 million of trading volume. Things don't really add up. On the Binance Smart Chain, we have a bit over 41,000 holders. And there aren't even a lot of new wallets interacting with the token. So 3 days ago, we had 1,800 wallets. Yesterday, we had 900 wallets roughly. And today, but today isn't yet over, we only have 400 new wallets interacting with Siren. Now, hopefully you've already watched yesterday's video, then you know what's going on here, right? It's not trading of the token directly on the centralized exchanges or on the decentralized exchanges. It's instead bets that are being made on the price that are moving the price of Siren. And we can learn a lot from looking at the details, what's happening with the bets on the price. Now, those bets are called perpetual futures. So with leverage, we can bet on the price of a crypto asset. And this is where all the action is. Yesterday, we had more than 4 billion worth of trading volume. 2 days ago, we had a massive short squeeze. 31 million worth of short bets got liquidated. So that's people that are betting on falling prices of Siren, and then the market makers, they buy up the token on the spot market. So imagine you only have to move maybe a few $1 million, $1, $2, $3 million to push up the price. At the same time, by pushing up the price, you are liquidating 31 million worth of bets on the price. Whenever there's an imbalance between the amount of bets on the price and the liquidity of a particular asset, there is a high chance that there will be a short squeeze. There's a high chance that the price gets at least short-term manipulated. We can see the effect of that short squeeze in the funding rates. So whenever we bet on a price, be this on rising prices, right, we go long, or be this on falling prices, we go short, we have to pay a funding fee. Now when the funding fee is positive, that means the longs have to pay the shorts. That's usually what happens for most assets long term. It costs money to get more exposure to the asset. Otherwise, if it wouldn't cost anything to get exposure, then why even bind all the capital into the asset, right? We simply just bet on rising prices. We could be more capital efficient. Usually we have positive funding rates. When the funding rates are negative, as we see here with Siren, that means that most people are bearish. Most people are betting on falling prices. So that's when the shorts have to pay the longs to bet on falling prices. Now when enough people bet on falling prices because they don't believe in the long-term viability of the asset, because they think maybe there's manipulation in Siren, they're betting on falling prices, and then the market makers bet on rising prices on the other hand. That's then when we see the short squeeze. That's then when the funding rates are negative. And that's exactly what happened with Siren. That's why the price went parabolic first to then come crash down again. What's interesting is that the the amounts of bets haven't yet declined that much. So there is positive correlation between the number of bets on the price and the spot price itself. When there's a lot of speculation, a lot of betting on a price, the spot price tends to go up. When the attention moves to the next asset, when then open interest on that asset goes down, the spot price tends to follow. What's interesting about Siren in this case is that even though many people had been liquidated with the short squeeze, the market makers still keep on holding the long positions. So the open interest is not yet down. And that's why the price has a chance to potentially short-term recover again. Now, Siren is just one of the recently manipulated tokens. There's also River. Now, I've also made videos on River, and we do see a lot of parallels here. And this is where you can find out how to potentially play the game. It's a dangerous game, but still, have a look at River. River went up to $86 to then subsequently come crashing down by more than 90%. But from that bottom, it rallied again by roughly 300%. And now it's coming down again, and this decline is what we see in this bubble chart. River peaked at 1.7 billion market cap. Siren peaked at 2.2 billion. Let's have a look at other meme coins, and let's ignore the large ones like Dogecoin or Shiba Inu. Let's look at the long tail. So this is Pudgy Penguins that peaked at 2.7 billion. Here we've got Bonk that peaked at 4 billion. Here we've got SPX 6900, it peaked at 2 billion. Here we've got Dog with Head, it peaked at 4.5 billion. And here we've got Fartcoin at 2.2 billion. What do we notice? It seems like most of those pump and dumps, they peak somewhere between the 1.5 to maybe $5 billion mark. Those pump and dumps, they don't go to 50 billion. There is a certain ceiling here, and that's probably when it becomes too expensive to manipulate the price. So it's a risk versus reward play for the market makers, right? We have to look at how many people are betting on falling prices and how much does it cost to manipulate the price upwards. Now, if the market cap is already at 5 billion, it's very expensive to push up that market cap to 10 billion or 15 billion. And so usually the price tends to turn around earlier. Now, it's more an art of a science, and it's very hard to say if the turnaround happens at 2 billion or at 3 or at 4, but at least it gives us a ballpark figure of when it might make sense to bet against the market makers. When the market cap of such a token is still at 500 million, it's very risky to bet on a turnaround of a short squeeze. But when it's at 1.5, at 2, maybe at 3 billion, it's much less risky. The risk to reward becomes better. Still, it is a game against the market makers, right? Against the most sophisticated players in the market. So if you are betting hundreds of thousands of dollars on falling prices of such a token, it still might make sense for the market makers to push the price higher. If you're only betting a few $1,000s, then of course you're not attracting the attention by the market makers. But once you move significant capital, it might make sense for them to squeeze you more. And that's the potential danger. So the game gets harder over time. Still, I think it makes sense to look at the market cap at a given point in time, and very long term. Of course, those assets have to come down to reality again. There's always a possibility for a bottoming and a turnaround, but again, it's one of the riskiest games to play in crypto. I personally prefer to just bet on falling prices of altcoins that do not have that much attention. I like to bet on falling prices of altcoins where we have a lot of token inflation, where new tokens hit the market, where pretty much nobody talks about them and they simply just continue to long-term underappreciate. So I mean this in terms of relative performance. For example, have a look at Balancer relative to Bitcoin and see how that's developing over the years, right? This is just going down long term. Here's a logarithmic chart, and that's because more and more Balancer tokens hit the market. And that's really the easiest way to make money in crypto. It's not trying to find the one or two altcoins that might outperform long term in a sea of losers. It's better just to flip this chart around and bet on the poor performers to continue to perform poorly. If you want to know what kind of trades I make, feel free to check out the premium membership. There's also an automated copy trading pool, so you can simply deposit your capital and get all my trades automatically executed. The link to premium is down below in the pinned comment. As usual, thanks for watching. If you got some value out of this video, feel free to give it a like. If it's your very first time here, feel free to subscribe as well. I publish videos regularly. See you next time on YouTube or see you on premium. Cheers.